The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. The first chart that I posted into Tiger TV today has to do with the stock indices because this is a P-index date, which means that there's a lot of cycles that are missing. It's only with there's only three things occurring, and they're all very minor, and that usually means something very significant. We also have the new moon coming in tomorrow, late tonight, early tomorrow, so that'll be very interesting to see if that happens. But this chart is very interesting. There's four charts up there. If you get a chance to take a look at them, I think they're very informative. The first one you look at is on the upper left side is a New York Stock Exchange chart, which is all the stocks, the NYSE, all cap weighted, so this is the best index of all to look at. As you'll notice, it was only making a 382 retracement yesterday. Right beneath that was the Dow Jones, and you can see that it was making a 50% retracement. And then when you go to the right, lower right, you'll see the E-mini S&P was making a 61% retracement. And now we have at the top, we have the NASDAQ, the steroids of all the stock indices went up and has made a 786 retracement as of yesterday. Today, the market started down. Was actually a little bit better at the beginning and then started down. I don't know what the reason was, but this tells us that 382 retracement in that in the New York Stock Exchange Index really means quite a lot, because we did come down and we took out that low of the 25th, and because this is a strong cycle date, there's a pretty good probability that this could be a high in here. But if we take out those highs that we made yesterday, then I would assume that all this is for naught, and it really doesn't mean a great deal any longer. So we'll have to wait and see. Now we've got one market that really is important. I know you think it's corn, but it's not. It's the biggest of all the futures markets, and that's the Treasury bond. I'm posting in here the chart for the junk bonds going back about a little over a year and a half, and underneath that is the 30-year bond. I'll post the 30-year bond separately, but I wanted to show this chart to show you what's happened, how people have been clamoring for yield. They basically don't care about what risk is involved. They don't call these things junk for nothing, folks. You know, Mike Milken's goal in life was to change the name of junk bonds to high-yield bonds, and that was pretty much the modus operandi until he went to take a government vacation, and then they moved him back to junk bonds again. But he tried to change the name of them back in the early 70s, mid-70s to high-yield bonds, and that's basically how many of these companies, finally stayed alive and made it. Some didn't, of course, but that's what the whole program was, to change the name of junk bonds to high-yield bonds so people could get financing. But we've had a really strong move in junk bonds. That means that the people are clamoring for yield. They're not worrying about what the downside is or how much they're risking when they're looking at these things. Now, we are at the proverbial moment of truth in the Treasury bonds. There's no 6 ways of Sunday to look at it. We are looking at a 4-hour chart here in just a second, and we have just completed, just a few ticks ago, within one tick of the 618 retracement going back to the Labor Day, Memorial Day weekend on the 27th. We came down 5 points in the bonds, and we've rallied up 3 points. That makes it a 61% retracement, and we're spot on right there. So I'm expecting that we should get some type of a correction starting in the Treasury bonds post-haste just about any time now. Whether that'll have any effect on the stock market, I don't know. But what we need to also do is we need to check the Treasury note market, and we're going to put that up there also, and you'll see that this one actually did make the exact 61% retracement. Give me a second here. There we go. And you'll see that it actually hit the exact number. 1 second here. Oh, darn it. I hope that popped in there. Let me do it again just to be safe. I don't know if I did it right or not. But you'll see that the Treasury notes, which is the largest of the contracts, it's not the most volatile, but they trade more of the Treasury notes than they do of the Treasury bonds, and they hit the exact 618 today at 125.06. So this is a very important day. I don't know if it's a lot of things happening. You know, we've had a pretty big move in not only the bonds, but we've had a pretty good move in crude oil to the downside today, and whether that's going to mean anything or not, we'll have to look at that in just a little bit. But I think the most important of all the commodity charts that we're going to talk about here today were the notes and the bonds. The fact that we've completed these perfect Gartleys right up here at the 61% retracement. It's taken well over 3 weeks to complete, which we were sort of expecting, and it's coming to fruition now. So we are at the proverbial moment of truth. You either keep the pot outside or you take the pot inside, but we are there. So if you're interested in selling bonds and notes, now's the time, because your risk is not going to get any cheaper than it is now. You only have to risk about $400 to see if you're right in this, because if it's correct, it's not going to go above that 61% retracement by more than just a few ticks at any particular time. Now, on yesterday's show, I posted the chart of the IBB, which is the biotech index, and it had made the perfect 786 retracement up here, and it has still done that. We've taken out yesterday's lows, which has some negative implications, so that's something that we want to keep in mind also, that's what's happening. So we're the good part, folks, is we're getting some volatility here, man. We're seeing the S&P move 20 points at a time, 20 points up, 20 points down. The Dow Jones up 100, down 100. That's what we want to see. This is when the final table comes in the poker tournament. You got to get in and see what cards are going to be dealt to you, because we've been waiting for this to happen for a very, very long time, and now it's happening. So we want to watch it real closely, for potentials to make to see if it's going to work. If you recall yesterday when I did one of those charts in the market, I wanted to emphasize the importance of what happened. I'll put it up here again. Yesterday, the day before yesterday, in the New York Stock Exchange Index, because it made a perfect 1.618 expansion on the 24th, 2 days ago, which was 50 cents higher than the one we made 5 days before that. And the one that stopped on the 24th was an exact 1.618 of the move from early June to mid-June. So that's a very strong mathematical reasoning to tell us that this market is most probably getting ready to have a pretty good correction to the downside, if that is in fact the case. However, if we do go above the old highs that we made during that time, then I would think that this is not going to be the thing that you want to be, is on the short side. But there's a lot of people still on the long side, and a lot of people waiting to get in. This is what we hear from the pundits on TV, and whether that's going to be the case or not, we have to follow them, one at a time. Now, I wanted to talk a little bit about the crude oil market, because we have had a lot of news over the last several weeks about the potential of war in the Middle East, which has been going on for 2,000 years. Not that it's any news of any kind, but we did complete a huge Gartley up here, up at the 786. And we hit it absolutely spot on. I mean, it was just as perfect as you could get at that 107.50 level. We tested it 1, 2, 3 times, and now we're taking out last week's lows. All we need now is to get a close below 103, about another $2 a barrel lower, and you could see an easy move down to the 99 level again one more time in crude oil. But crude oil right now is just making a normal correction. It's been down 10 days now, and what it's doing is it is actually setting very close to a, let's just put this up on a 60-minute and take a quick look at it, because you'll be able to see it. You'll be able to see it a lot better here. If I can do one thing here, and I'll bring it up. There we go. We're almost there right now. We're just making a final 382 retracement. We're just a little bit below it right now, which is sort of negative, but we've got an ABCD pattern that validates where we are, because that's over the past several days. It stopped right where it should have. And so I'll put this in just 1 second. Give me one moment of time here, and we'll get this done. There we go. Because I wanted to show the 3 drive to the bottom pattern that we had at 101.50 in the crude oil. Then we went up, and then we made the 786 retracement, and now we're right at an ABCD move in the crude oil. It should have pretty good support here at the 105 level. If it doesn't, then that's telling us that there's probably something a lot more downside in the crude oil itself. I really think that, if you'll give me a second here, I wanted to highlight these ABCD patterns that are here, because they are very, very symmetrical and very harmonic, and it shows you the importance. Let me blow it up so we can see it a little better. There's what I want to see, and you can see the 2 ABCD patterns that have formed in the crude oil down at the 105 and change level. And as long as we can hold that, that tells us that we've got a pretty good chance of coming down. Now, this has been, we made the high on the 20th, so we are 6 days into 4 of those trading days. The other 2 were weekends, but it is, we're down 4 days, so we're getting oversold here in the crude oil, and it should have some pretty good support here at the 105. Failing that, it looks an easy move to either 103 without any trouble from my perspective of looking at it that way. One thing we're going to have to do after the break, or not, we don't have to do it, but I would like to do it, is we need to look at the foreign currency markets, because we've had some really good moves in foreign currency here recently. Particularly the Japanese yen is broken down below some really strong support. And I think that will be something we need to look at, because it has a high correlation to what's happening in the stock market with what's going on, in the commodity markets, especially, things like soybeans and things like that, because Japanese economy takes in a lot of soybeans because of tofu, which is, 100%, soybean meal. Okay, we'll take a little break here. The Dow down about 79, and the gold is down about $4.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're going to switch our gears on our little tractor, our little International Harvester tractor, and we're going to go to look at the corn market, taking a look at December corn. We've been waiting for this double bottom to form down in this area around the 436 level. We came very, very close to that yesterday at 437 and change. We've had a little bit of a rally here, around 8 cents today, probably just because the market is so very, very oversold. But we have this, as a potential buy, and it looks really, really interesting. Now, I believe on yesterday's show, we were also talking about the wheat market, and the price that we were looking at in wheat, I believe, was the area of 578, and I think that was it. Yes, that was it. Let me put the hourly chart up so that we can take a look at that. I think that was the one. Yes, that's the one we were looking at, because that was the 1.27 expansion of the last swing high that we made. Down in that area, it came in at 580, as a matter of fact, and the low was 577. And we've had a really sharp rally in the wheat. We originally took off about 10 cents, which was $500. We backed off to a 786 retracement again to 580, and then it's had a pretty good move to the upside. So that's what we're trying to do when we're looking at these commodities, is that when you look at the daily, the first thing you want to do is to go down to your hourly or 30-minute to see that the pattern is there and that you can possibly get a better entry than what you're looking at, on the daily. Because as you move these charts through the time sequence, they become more and more accurate, but also they become untradeable. In other words, if you're just looking at a 1-minute chart, I don't know how anybody can trade that. 2-minute, yeah, if you have a lot of energy and you're really young, you could probably do that. But 5-minute would be the absolute minimum for me if I did that, and I frankly don't. 15-minute is my medium, and I don't watch the charts, that all day long. I go in about every half hour, and I'll double check, to see what's happening in the markets, and I don't really try to get too much more involved in that because it gets a little bit it just consumes too much energy. And the other thing that's important is the fact that it's not good for your eyes, and especially when you have 42-inch monitors. But also the other reason is the monitor is not your friend, folks. The monitor is your mortal enemy, because it basically it's a mirror image of all the things that are going on in your life at this particular time, and you're looking at the market, and those are in your background, in your back of your mind, and if you don't have those cleaned out, you are in big trouble, because you have to mentally prepare yourself, to only think about the markets, not worrying about whether your child has a cold or has an allergy or anything like that, or how you're going to pay the bill tomorrow, or whatever it happens. Well, if you have to worry about paying the bills, you shouldn't be trading. But try to keep your mind just as clear as possible, and try to meditate. If anything, just 3 or 4 minutes, maybe 5 minutes. Read something like out of Mark Douglas's book, Trading in the Zone, or out of any book that's positive thinking, like Tony Robbins, stuff like that. W. Clement Stone, Napoleon Hill. The things from Chinese literature from Lao Tzu. Those are very good for just clearing your mind. In fact, I read one today, I think I mentioned it, from Erica Chung, who's a psychologist who lives in Connecticut, and she said, always face your fears first, because facing your fears is an acquired taste, and once you can do that, you realize that fear is nothing more than false evidence appearing real, which Tony Robbins talks about. So you should have any fear in the markets of ever putting an order in if you put a stop in. If you don't put a stop in, folks, this is what you've told the market. I am smarter than you, and I know that I'm right and you're wrong. And believe me, markets are never wrong. Men are often wrong. So you have to remember to protect your backside, because that's the only thing we can do in these markets, is to protect your backside. And that is the side that you sit on. So be very, very careful of that. It's very, 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 very important. Now, I wanted to show the chart for July corn, because it looks certainly different than the one that was the double bottom in just let me get this up. There we go. If you'll notice here, when I put the market in for July corn, you'll see that it is very, very close. It came within a half a cent of the exact 786 retracement. It hasn't rallied very much yet, but it's also telling us that we're close. Okay, we got the Dow down a little more than 80, gold down about 6, and that's about it. Silver's down a little bit also.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter Market Insights comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I've posted a chart of the daily gold chart, and as you can see, we've had this explosive move to the upside coming off of that really nice Gartley pattern that was down there. It was also a 3 drive at that point, down to $12.45 per ounce. We've been here for 5 days now, folks. We've had very little movement between 1326 and the low that we made today at around 1308. So it's been very, very tight ranged. The second chart that I'm going to post in here is the open interest figures from the Chicago Mercantile Exchange, and it basically shows in the metals. Now this includes both gold, silver, and copper. And because gold is by far the most, I assume that most of this open interest change is related to that, but we don't know because they don't break it out. You would like to see a big increase in open interest on a big move up, and we haven't seen that as of yet. But we've also seen shorts leaving the market, and all it takes now is just some new buying coming in, and this market could just literally, accelerate to the upside. We need to get it to above 1335 per ounce, and I think it could be on its way. I would really like to see a 382 retracement somewhere down around the 1295 per ounce level in gold, but the market doesn't always give you what you would like to have, and that's something that I would like to be looking at. We got a call from Brent in California. Brent, can I help you?
You sure can, Larry. I had a general question for you. I don't know if it's going to be that easy to answer, but I'm sure if anybody can do it, it'd be you. So,
well, if not, I'll lie to you. No, I won't do that. But go ahead, Brent.
My question is, I've had some frustration in successful trades. When I exit the trade, I've left some money on the table, and I'm not a greedy person. I generally, when I have a good profit, I take it. I'm just wondering if there's some discipline that you use, or I mean, trailing stops, or just if you could kind of walk me through generally how you exit a trade, or just try to touch on that a little bit.
I would be happy to, Brent. This is something that Mark Douglas and I talk about a lot years ago. I don't do it any longer because he gave me the holy grail of that answer many years ago. The question that you had is about leaving some money on the table, correct?
Yes.
The only way that you can't leave money on the table, Brent, is if you pick the exact high or the exact low. You see how absurd that is about thinking about leaving money on the table? Because the only way you're ever going to leave money on the table, and not leave money on the table, is if you get the exact high or the exact low, and those are reserved for me, and I'm not going to let you in on that, okay? No, it's silly. You just got to shake it off and go on to the next one. Think of this when you're doing this. This is a business of making money. It's not about being right or wrong. So just because you leave money on the table, and believe me, I leave a lot of money on the table, but you have to forget it and move on to the next trade. That's all you can do. There's absolutely nothing you can do about it. So just because you've left money on the table, that just means you haven't picked the exact low or the exact high. So don't let it affect you.
Yeah, I'm generally just happy to have made money, and like I said, that's obviously what this is all about, or generally what it's all about. So that makes sense, and I'm sure I'm not the only one that's happened to. So
well, I can tell you right now, I'm looking at the dialogue going on in the Tiger Den, and everybody's saying, "Please leave some for me, Brent." So that's so everybody's saying the same thing. So just you cannot pick the highs and lows all the time. You might get lucky once in a while, maybe 1 out of 10, 1 out of 20 times you'll be right spot on. But most of the time you're going to leave money on the table. That's just the name of this business. That's just like taking losses. It's just like breathing. You've got to be able to take losses in our business, because if you don't think you can take losses, you're in big trouble, because now you've come into a point where you really are between a rock and a hard place. So just try to forget about that and just keep trading.
And so, do you use trailing stops, or do you use
No, I don't use trading stops. I use profit objectives. Usually, for instance, if I'm risking, like today in the bonds, I'm selling bonds, and I'm risking 12 ticks, which is $360 in a bond position on a 4-hour chart. And so we have multiple positions on. So as soon as we make 12 ticks, if we are fortunate enough to have that happen, what we do is we book part of that, usually somewhere between 25% and a third, depending upon the power of the pattern and how quickly it gives us the 12 ticks. If it gives us the 12 ticks in a matter of 5 minutes, we are going to wait a little bit. But if it takes 2 hours to give us 12 ticks, we're going to take part of that off and then reduce our risk down to where we're only risking maybe 6 ticks on the trade. It's not about how much you make, it's how much you risk.
Oh, absolutely. And I've done the same, where if I've quickly made a profit, I'll take off a portion of the position, and to at least preserve your principal in the trade, and then whatever you make above that is obviously gravy. So okay, well, it's not like you've answered my question, and I didn't think I was the only person that's happened to. So it's
well, it happens to all of us. It really does. In fact, that's what Mark used to tell me. He said every person in the world thinks the same thing, because I left some money on the table. Well, you have to. The only way you can't leave money on the table is if you pick the exact high or low, and that just doesn't happen very often, does it?
No, it doesn't. That makes perfect sense.
Yeah.
Well, I really appreciate your time, Larry, as always, and you did a great job of explaining it to me.
Well, thank you. You gave me the one question I can answer, Brent. Thank you so much.
You take care.
Okay, my friend.
All right. I'll talk to you again.
You bet.
All right, bye.
Okay. I wanted to talk about the open interest a little bit more because of the importance of it. If you'll remember, we're going to put a weekly chart up here from silver going back a long time ago, way back in 2011 when open interest was dropping and the market was going straight up, and we were trying to give an idea of what was really happening there. And as you can see, you need to watch open interest, especially when you're at really critical levels, near highs and lows. What we're looking at now is a potential bottom in silver, because we've had a triple bottom Excuse me. And it looks like it has some more to go to the upside, but thus far it stopped right at the 786 and is held at this 121.50 level. If we can get silver above the, not 21.50, once we get silver above 22.50 per ounce, then we have a really good chance for silver to have a pretty good run. Okay, now the next one we need to look at is I want to go into the foreign currencies here for just a second. I want to look at the Japanese yen because we are at we've broken down below the coveted 61% retracement here in the yen, and it looks like we are getting ready to we've had a triple test of this level in the Japanese yen before. Excuse me one second, folks. It's tough when you get old. Okay. Anyways, you can see we are breaking down below the 61% retracement at that 101.50 level. We're slightly above it now in the Japanese yen, but it looks like it's going to go lower from my point of view on a technical basis. So we should get down to par, which is down another $1,500 from where we are. The one that is really on the radar is the euro. We're going to put that up on a long-term basis because this euro affects all of us, folks, commodities, stocks, mutual funds, everything, because this is cash moving from one to the other. It's a euro versus the U.S. dollar, and this is a weekly chart, and it shows that we've been in a really strong downtrend for quite a while. We were down 5 straight weeks, and now we're trying to rally. But what's interesting about this rally is that if we take a look at it on a 4-hour chart, you'll see that we are not even, well, we're about 75 pips away from a 382 retracement in the euro, and so that would be an area where I would think we want to be looking to maybe institute a short sale in the euro, because we took a whole month to come down from 139 down to 135. That's a little over $4,000, and all we've been able to rally so far is around 1,200. So we've not been able to make a 382 retracement yet on that particular one. I've had a request here to take a look at natural gas, and if anybody is equipped to talk about natural gas, I think I have to be the one. I don't know if you folks know this or not, but the name Pesavento in Italian translates to big wind. Well, I'll probably never hear the end of that, but that's the name, and that's because I think my ancestors must have been great orators, or I won't even go into the next part of this. Okay, we've had a really good, oh, this is a very interesting chart in natural gas. Give me 1 second to put the ratios in, because it really has a beautiful ABCD up at the top here just recently. Wow, spot on too. Very, very nice. And now we're down at the 786. It looks to me that we're at pretty good support here in natural gas down here at the 4.40 level. That's what it looks like. So it should hold that 786 retracement. There's a nice cycle that's present at that time also that would tell us that we should be bottoming here today or tomorrow in natural gas, and we should be able to see a rally. We've been down 1, 2, 3, 4, 5, 6, 7, 8, 9 days. We had a little tiny 2-day rally in between there, but this is a lower low after a 2-day rally. We must hold the 440 level, because if we don't hold 440 in natural gas, we got a problem very, very serious on the hand of those holders of long natural gas, because if it can't rally, it only has one other place to go, and that is to the downside, and you don't want to be on that particular side of the market. Okay, the next one I want to talk to is where a lot of the money has been moving, and we'll move this up here a little bit here so we can see where we are here with the British pound. As you can see, the British pound has completed a 3 drive to a top pattern up here at the 170 50 level. We're still in this same area where we've been for quite some time. If we look at this on a little bit longer time frame, you'll see that we could get up another 150 pips and we would have a really spot-on, perfect Gartley pattern forming in the British pound. So we'll see if that is if that's going to happen. There's a beautiful ABCD up there at the 173 level, which is about 280 pips from where we are now, and we'll have to wait and see. But right now it's just hovering, flirting with this 171 level that it's been at for well over a week, and it's trying to decide whether it wants to back out, to break out to the upside or not. So we'll just need to take a look at this, and we'll go to the next one. Give me 1 second here to get the next chart. I think I did crude oil. Yes, I certainly did. And I wanted to make sure I covered crude oil because there's a lot of support at 105 in crude oil, folks. That's a real key figure that is should make crude oil, because we topped up here at 107.70 three times. If we get above the 108 level, we could easily see 113 in crude oil without too much, without too much trouble, is what I see. But 105 is very, very important in crude oil from a technical standpoint of looking at these particular swings that we're watching. I wanted to also talk just a tiny little bit about soybeans here, because we're starting to see a pretty good move here in November soybeans. It's also in context with what's happening in some of the other markets that we've had. But we bottomed in soybeans several months ago, and what's interesting here, folks, is that the low that we made these last several weeks was an exact 382 retracement. We pointed that out several times, that $12 a bushel level in soybeans was very, very important, and we hit it three times, and we did not go below it. So that's telling you that 382 level in the soybeans is very important. Now, we do have a possible major topping formation there, which is the 1, 2, 3, 4, 5 expanding triangle that I've marked. And as long as we don't get above that 1280 per bushel level in soybeans, we've got a chance to see that it's going to hold. We do have we'll have a Gartley forming up here pretty soon, about another 13 or 14 cents higher in the crude oil, in the soybeans, but that's a little away. Of course, the way the market's moving these days, it can get there very, very quickly. The bottom line here is that November, the new crop soybeans, there's a lot of demand for them, folks, because they could only back off a very, very short amount of time from our February lows. So when we went from February to May, pretty much straight up. Okay, we've got to take a little break here. The Dow down 78. S&P down 5, and gold down about 6.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, and we have a call from Oregon. Kim, are you there?
Yeah, hi Larry, how you doing?
I'm good, thank you. What can I do for you?
Yeah, I haven't talked to you in a while. I think it's been a couple of years. I was talking about long-term kind of AB equals CD top in the gold at $1,900 and whatever back in 2011. But right now I'm looking at a very long-term timing symmetry in the stock market that aligns with your thinking here pretty much. With these June highs that we just made are very important in my work. If you remember, July 8th, 1932 was important low.
Yes, it was. The Dow hit 32.
Yeah. And if you look forward to the highs in the 60s, December 2nd, 1968 was an important swing top in the middle of that big 17-year sideways. Anyway, that was 13,296 calendar days. And so I just added that number of days to the low on 12/6/1974. And in calendar days, that projected to exactly May 2nd of 2011, which was the day of the top before the 2011 kind of, good.
That was our last big correction, yes.
Yeah, so I took that same number of days measured in trading days, which is significantly different time span because of the, they used to do Saturday trading. My data has Saturdays in it up till 1952. And so that number of days is 9,972 trading days. And from the same low in 74, that projects to June 10th of this year, which was in the Dow. That was pretty much the high day. I think that timing is pretty important. We'll see, but I've got some other things that line up there price-wise as well. But that was a timing symmetry that I thought you might find interesting.
I certainly do. I've been watching, I do watch the calendar days. I watch calendar days more than I do trading days because people are thinking about their positions, over the weekend for sure. But this is a monster pattern. People tell me that I'm crazy and it's different this time, and they might be right on both in both aspects, but I don't think so. I just think that it's just held up here a little bit longer. It has everybody totally complacent, and everybody thinks that they're going to be able to buy a correction if they have one. I'm sure they will have one, but it's not going to be like what they think it's going to be. This is a historic market, and it's going to end very, very badly for people that are long. I firmly believe that, just because of the margin debt and the fact that there's basically no one out there that is bearish other than you and me, Kim.
I agree entirely. I mean, the market will definitely, in my opinion, put in a major top here, and it just had to do it. It just had to take its time and time I think has run out. Also, the value line, not geometric, the value line arithmetic index. I don't know if you ever look at that, but I've found really fascinating, just perfect relationships in Fibonacci expansions that point to the exact highs that we just put in from long-term swing points. So I might send you some of those charts to look at when you get bored.
I would really love to see those, because I'm looking at these 7-year cycles between 99 and 08 and where we are now, and it's such a beautiful, a 3 drive to a top pattern. And when it's this big and goes back this long, you can't hit it spot on. Kim, we're running out of time. Thank you for calling in, my friend.
Okay, talk to you later, Larry.
You bet. Live every day in an attitude of gratitude, and may God bless, and perform a random act of kindness today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.